All right, it is last day of the month, last day of quarter, um, last day of the year on a lot of books for. So we might see some sell off today, but I'm open to whatever they want to do. Now, as you know, beginning of the year, I said 2024 was going to be a continuation of the bull run. Um, Here's your seasonality, and the fact that we are green on a September shows you how strong the market is. And so, we pulled forward the weakness in the beginning of the month, and then we just rebounded. And I mean, strong market. I think every month has been green except for one so far. And you know, uh, this doesn't even matter because we pulled all the bad forward. And the thing to just keep on for the rest of the year, keep this on top of your brain. The word recalibrate. That's what JP said, right? It's time to recalibrate our focus. So they are focused on jobs and they are focused on stimulating the economy now. Okay? That's what you need to really focus on. And again, this is the Substack I sent out on China. If you did not get that, I can post the link in here. But I would strongly recommend reading it, and it has inside of it a lot from the presentation that I did 6 weeks ago, and I would highly study that so that you understand how the global economy works with the weaker dollar, so that you'll understand what's coming. Even though we've gone this far up with China, I think there's more to come. Um, so, okay, you guys didn't get that. Okay, dividend focused stock funds, for example, had the highest inflow in 24 weeks, right? Well, the reason they're doing that is because as rates go down, right, the dividend stocks become more attractive. And so we just had the highest inflow in 24 weeks. And these are just a couple of the dividend stocks that I like, right? And I think SWK will benefit from lower rates, right? So if I were you, and if I can't say that, what I do is I am allocating a portion of my portfolio to these dividend stocks, and I think we'll continue to see money moved in to these as rates go down. They're going to flow out of the money markets into the dividends. And one that I just got out of was MMM, right? We nailed that one. I still like it, but it was time for me to take profits because it hit my predetermined level. Somebody asked me about the Case-Shiller index showing us signs that we are at a historically high range for valuation. Now, while I agree we're above normal, I don't think we're too high. And what you always have to remember, in my opinion, earnings runs the market. If we see the earnings start to do this, right? Yeah, we've got some things to worry about. But you can see from FactSet. If again, this is a thing that you can subscribe to. It's free. But all of these, you see how we're up 15, 10, 14, 13, revenue up 5. So we're continually going up in earnings, and as long as we're doing that, then I think we're okay. But I do think some of that is priced in, right? So if this next earnings report that's going to be coming up, if we see people saying, "Hey, we nailed our earnings report, but we're going to lower guide," and that becomes the theme, right? So this goes from this curve to maybe this curve, right? Then we might be priced too high. But until I see that, I'm still thinking we're going to have a great next year. And remember, this was the quarter, like this earnings report coming up, this was the quarter that was going to be slower. So let's see. Historically, you can see when you have a first half of 10%, what happens in the second half, right? And that's where we are. So I'm in no rush to get out of longs and or short this market. Even though I do think we will have a pullback before the election. And we have tons of cash on the sidelines from funds. Sorry, that's my dog. And retail investors. So, they're talking about how much cash is sitting on the sideline, right? We got, instead of having 10% of their account in cash, they've got 25 to 30, which is really, really high. And they did a survey to say, hey, what's going to take to get all that cash invested? And they're saying 3.25. I don't think we get that low anywhere soon, anytime soon, but we could. So, but anyway, there's just a lot of cash on the sidelines, and then people will chase because they start experiencing FOMO. Case in point, BABA, right? So BABA went up 25% in a week, right? People are FOMOing. Like, there's reports of China having to do 24/7 to handle the the rush of people coming in to open up accounts, right? So anyway, one of the things to think about, cyclicals are highly levered to China recovery. And so what I would do is take a copy of this slide, and I'll share the slide with you. And so you'd want to be able to look at this and figure out how can we make money off of this. So, like, just as an example, like Wynn, right? Wynn is a casino and gaming, and it's 50%, right? So the correlation to China is high, and so Wynn's shooting up as well. So I think there's going to be a lot of opportunities to make money by using this info. And then the other thing is the R2K has twice the exposure that the S&P does for the sector weightings. And I think you guys know I'm long and strong IWM, but this is just another data point that explains why. Now this one, man, this is blurry. This one's got a lot of data on it, but the theme of this is that domestic small and mid cap equities benefit from reshoring and increased government capex. And it's just going through how stuff's old, right? This is showing the old. Manufacturing capacity is actually starting to bounce up, right, after 10 years of lag. Capex as a percentage of operating cash flow just off historic lows, so we're starting to bounce here. Infrastructure spend is finally picking up. And this is a note from Bank of America, and it's down here, and they're talking about how you have this, right? And then you talk about small caps growth is highly correlated with U.S. capex growth. So picks and shovels do extremely well. And one of my favorite picks and shovels is SWK, right? They're literally does anybody own DeWalt? All right. Now, the other theme that I've been talking with you guys for a while is if you look at this manufacturing construction spending, like, I mean, we're going through the roof. Isn't it crazy? Look, I mean, look how it's like, whoop. Well, this is what they're spending on it. Anybody tell me why? Right? What are they spending? What are they buying? They're building data centers, right? Because of AI, right? And so we need electricity. We need a lot of electricity. And I personally believe that comes through nat gas and nuclear, right? And don't make fun of how I say nuclear, right? um, and again, I told you a few companies, CRK, Nat Gas, and BWXT is a leader in the SMR micro reactor space. So what I do and what I hope you guys do with these weekly data dumps is don't let the data overwhelm you. Come in here and get the general theme of what it is, and that general theme is bull market. It's a bull market, and I'm going to be long and strong through 2024, unless data shows me otherwise. And then I'll have sub themes within, like I told you guys, China all year. I've told you dividends in the past, 3-4 months, as we know that rates are going to be coming down. I've been telling you about power, right? And I think power and the ability to get these data centers their own power is going to be an important theme for the next few years. And so take some of these themes and figure out how you can make money and how you feel comfortable making money. This is a chart from the 75-76 rally after the Fed cuts. And again, you can see what benefited the most. Small cap, value, right? These are the biggest two. And then growth, right? Growth is something I'm always in. But small cap and value really does well. What else does well? Emerging markets, right? China. And again, that Substack that I wrote will explain why. This is showing you how. I mean, this is just crazy. Look how high we are on U.S. versus global equities. Now, what I want you to understand is I'm not betting against the USA, but I am putting my money in other places because, look, I mean, this is just crazy. Coco, quit. My dog is scratching her ear. Sorry, and she's wincing. So because we're so far extended, I do believe we will get a pullback, and I think that's going to come over, maybe the next decade. To be honest with you, maybe 4 or 5 years, but I do think we're going to start getting more of a pullback, and so that, to me, it's important to be able to have some of your money in something other than the USA, and for me, that's China because of the 1,000 times I've explained why. If you look at the MSCI World Index, you can see we make up almost 2/3 of the MSCI World Index, but account for only 1/4 of the GDP, right? So, the US is this big blue, right? We account for all this, but we only produce this. And so now, is it going to go back to 25? No, but I think we can get smaller, and I think we're going to. All right, let's see. Now, a lot of other people do not believe me. They don't agree with me, right? And so you have to make your own decision. Do you think that emerging markets will do it? Do you guys think that? Like, if you don't think China's going to actually recover, and this is just, a short covering rally, and China's going to go back to their old ways and attack they're going to attack the companies that make a lot of money and try to, exert their power, then, I'd be selling all of my China and getting out. But I actually believe that China's got a good probably 3 to 4 to 5 years before their economy is going to roll over and the population will collapse on itself because they don't have any people underneath to support. You always want to look at demographics, and if you look at the USA, it usually looks like this, right? And you've got the young bucks here, the older, and then the young. Well, China's looks like this, right? And then it's going to do that. And so I think we've got about 3 to 4 to 5 years of good China. And you still have single digit multiples in China, even after this rally, which is just crazy, right? I mean, how low were they to still have single digit multiples? And, think about the gap that we have to make up. So even though I am taking some profits in China this week, I think Baba can easily get to 150. And that's where I'm taking a chunk off. And then let's go 200, right? And you'll expect more people to follow China and turn on the money printing machines, and we will increase global liquidity, right? So do you see where we are? And again, if you go back and read that Substack, this is what I'm talking about, the increase of global liquidity and why it's important and how it's going to happen. Okay, now let's jump to the week ahead. What time is it? Got 4 minutes. I got to run through this, guys. So the non-farm payrolls are the most important things until the election, and we've got one this week on Friday. So just be aware of that. Those are the market-moving events. And here are some other ones and some plays that I'm watching. I went ahead and did the monthly. These could change, but I don't think they will. And I also did the quarterly. But I really like NVIDIA. I'll be playing this as an ICB monthly. And Uber is a rev strat. If you don't know what that is, I've got a video on YouTube about it. And Uber is a quarterly rev strat, so I really like that chart to play this next quarter. Disney is as well. And Disney has room above to about 100, but once that quarterly breaks, it's actually going to break right into this resistance. So I'm sorry, once the quarterly breaks, it's going to break right into that 100 resistance. And so I would wait until it gets over 102. Tesla's quarterly chart is bullish as can be, and you've got a nice little base here, but you are running into some resistance in between 260 and 280. They do have earnings, and if they bode well, then you could easily break this 300 and be on your way back to all-time highs. I think PLTR is going back for all-time highs, and a lot of people are talking about the pricing of this, about how it's overpriced, and if you're using antiquated models to price this one, I think you're going to be missing out. But I do like this one, and I'll play like TPS setups on it. FLR has a rev strat on the monthly, and this is a company that benefits from global spend, right? So again, I would have these on your master watch list if you wanted to play some TTM squeezes on them. Some ICB weeklies. I'm playing the green checks for sure. I've set the alerts on the other ones, and we'll decide when I get alerted if I'm going to jump into them. And then some monthlies. This is the monthlies. Again, we have 1 day left, so if we get a huge sell-off or a huge rally, these could change. But this is the list as of today. And then this is the list for the quarter. And so you'll notice NVIDIA, right, is in both. And so if we can get NVIDIA to start breaking, we should get a what I call waterfall, right? Give me one sec, guys. We got 30 seconds to the market opens. If Trump gets elected, are you going to be bullish on China? Yeah, I will. A chart that I like is Meta. It's got a beautiful TTM squeeze. And so if we get some weakness today, I'd be willing to buy Meta. All right. Give me one sec, guys. I got to do a couple things as soon as the market opens. Man. So I've got like a $6 spread on this BABA option. So I'm gonna just put it in at the ask side and slowly start walking it down. Yeah, I am recording. It's recorded. Here, let me actually stop this recording.